Okay, so I've been trading 7+ years, only trade YM. I trade between 8 a.m. and 11 a.m. Eastern Standard Time, and I give myself 3 shots to get a trade right. If I can't get it in three, the trade is just not there for that day. So real quick, gonna get into this week's trade so far. This week I've only traded 3 days. Tomorrow we're gonna see what we get. Every trade has been pretty much a win, but some kind of incomplete. And one trade I actually missed out on an opportunity. So, and in reality, you can't really miss an opportunity, but due to a data issue, I ended up not catching the sale of today that I originally had my eyes on. So let's get into it. Monday, I did not take any trades. I was on my morning walk and decided to go to the pool instead of trading. Mondays are a little iffy for me anyway. Mondays are typically straight to the point, or they are kind of BS like this. You know, they came down, took Asian, tap demand, but never did follow through and take out London and or take out the previous day's high. So it's cool. Typically, when Monday does this with YM, Monday is just setting up for the rest of the week to play out however it needs to. So it usually acts as additional liquidity supply demand zones for the next coming days to play off of. Okay, so with that being said, as you see, the next day, Asian goes up, takes out this little high, comes down in the transition from Asian to London. They sweep yesterday's low, so we've already taken liquidity going into London session that gave them the fuel to then drive London up for the rest of the session before New York came out. I took this sale. I actually got stopped out on the first one. So the first trade I took was at 9:30. This 9:30 candle came out. So just break down my logic here with what I was thinking and why I took what I took. So 9:30 candle opened up right here next to 9:15. We were already this close to the previous day's high as well as these highs here, and we had a fair value gap all the way to the left. So as 9:30 candle opened up, it went up and immediately shot a wick into this fair value gap, taking out yesterday's high and the previous day before that. So that was liquidity. As that candle began to fluctuate back down towards the open, I went ahead, took my first sale, put my stops above the wick, which was at the time right here of this 9:30 candle. It started to press down, as you can see, and then it swept the 9:15 candle and eventually ended up flipping up and going the other way. So I got stopped out. Once 9:30 stopped me out and I saw they ran through this fair value gap and they came to this other fair value gap, I was like, okay, cool. The sale could still be valid. It just depends on if they close this gap here and continue to go up or if they decide to hold this gap. As you see, 945 comes out with no bottom on it, which is a telltale sign for a transition, a momentum transition beginning to take place, because this candle came out and went straight up. It did not even throw a wick to the downside. That's usually a strong indication that the market is actually trying to shift momentum in the opposite direction. So as you see, they came into this fair value gap. 945 went through this one. They went all the way to this next one here. If you can see it, clear as day, clean fair value gap there. 945 candle came and tapped right into there. And as soon as that 945 candle began to withdraw and leave a wick, I went ahead and immediately pulled that sell. This candle, once it fluctuated down, it came back up and closed here. 10 o'clock candle came out, mitigate the 945, and from there it was just going down. So this is how I manage this trade, and this is very, very important. This is more important than the actual entry and taking the trade itself, right? When this 10 o'clock candle came out, understand this 945 candle is a single candle order block. Why? Because it not only filled in the fair value gap, it swept the previous candle, okay? The fact that it swept the 930 candle, this is a single candle order block. And the thing about it is, this is where time and experience comes into play. You may look here and say, well, the body of this 945 candle is slightly above the wick of the 930 candle. Understand sometimes when price action, it's not always perfect, but when you see this so much, you understand what's actually taking place. You see how the closing of 930 is here and the opening of 945 is kind of up here. So it's space in between. In all actuality, this 945 candle technically opened up next to the 930 candle, which means that if it closed here, it technically closed below the 930 wick. Although it doesn't look that way from looking at the chart, you can tell by the slight offset of how it opened, the slight offset of the candle positioning, that's considered a sweep. So single candle order block. How else can we confirm that this is a single candle order block that can be used as a supply? We're tapping into a fair value gap, but furthermore, 10 o'clock candle comes in and mitigates into the wick, into the shadow of this 945 candle, which lets us know that this is a valid single candle order block. Okay. Now managing, we have a massive fair value gap here that was formed by the 930 candle. I understand from my experience that with these fair value gaps are technically they are imbalances, okay? Between here and the previous candle on the opposite side, this area in the middle is a imbalance, a window of imbalance. What happens is orders flood into the market very, very rapidly and quickly at this time and price, and it forces this gap to be left. These are typically unfulfilled orders, okay? And what you typically want to see price do is come back to this gap, hold this gap, fulfilling those orders, and then continuing in the direction that the gap was created. If the market comes back and goes against this gap, it now is a clear sign that the market has directional intent to go the opposite direction. And now sellers are coming into the market and taking over control. Now, with this fair value gap, since this 10 o'clock candle came down and closed bearish engulfing, closing this gap, they have to open a new gap. You would then typically want to see the market pull back into that new gap, hold that new gap, and then you can take a trade continuing to the opposite direction the new gap was created in. In this case, I was already in the trade, so I didn't have to get an entry here. And thankfully I didn't, because the market did not pull back up into this gap, into this technically an inversion at this point. When you have two fair value gaps next to each other like this, it's technically called an inversion or an inverted fair value gap. I didn't have to wait for the market to pull back into it to get an entry, and thankfully I didn't, because they didn't do that. From there, we had this demand. Now, 930 candle swept the 915 candles low, which makes also the 930 candle a single candle order block. In this case, the shadow, the wick on the bottom end of this candle can be used as a demand zone, okay? And as you see, 10 o'clock candle came down and mitigated into this demand zone. Then the 1015 candle comes down and sweeps the 10 o'clock candle. The only way I would have been concerned about getting out of this trade or this trade reversing against me is if they would have come back up and closed this new gap. If they do not close this new gap, I am not concerned with them coming back to entry. I am not worried, okay? So next thing we have is the 1030 candle comes out, bearish engulfing, straight through the demand zone, closes below 930, as well as closes below 815. So now we are closed below the start of New York, because the 8 o'clock candle is here, the 815 is here. So the low of New York, we have closed below it and formed a new low. This, when candles displace like this, when they close below demands, when they close below previous session lows or highs, that is an indication of directional intent. We can look for the market to possibly continue in that direction. As you see, it formed a massive gap here, and you see the market pull back up and mitigate it into that gap before it continued down. Next place they stopped at was this London demand. Okay, and you can see we got reactions to the London demand. So you had pressure coming here, market came down, reacted to it, another reaction. They attempted to go up, and then they attempted to go up again, but the sellers brought the market back down. Eventually, they ended up pushing through that zone, taking out London low, taking out the low of the day, and they came all the way down and took out Asian low before the day was over with. So, I mean, it was a pretty good trade on that day. It was pretty clean and easy to take, all right? Now, next day, okay? So now the next day, which was yesterday. So I took the sale on this day. It was a little tricky at first. We had this London demand here from this single candle order block, okay? And we also had inducement here. This candle here swept the previous low's candle, so this can be used as inducement, okay? 8:30, I typically don't take trades before 9:30 unless 8 o'clock or 8:30, 8:45 gives something that's very obvious and clean. Although they gave me this sweep to the upside where we took out London high, we took out inducement. We didn't really tap into anything important or significant over here. As well as they threw a wick to both sides. I wasn't that sure about taking the sale just yet. And then from here, once the 950, I actually was looking for them to come into the shadow of this 830 candle and mitigate about halfway. And as you see, they didn't make it to the halfway point. 915 candle pulled up about right here into that wick. And then 930 candle came out blasting down. Once it got about right here, I went ahead and pulled the trade because I could see that it possibly could, continue to go. And the way it looked at the time on the higher time frame on the H1, I could possibly see them, since this bearish engulfing candle was so massive and we're so close to the low of the day already, I could see them continuing lower, which is why you see my target was way lower, okay? As you see, they came down. They ended up sweeping this London demand here, swept Asian low, and they just kind of ranged out for the day. Didn't give anything else, so I ended up kind of taking a partial profit on that. It didn't hit me out stop profit. I ended up just closing the trade once it just kind of kept going sideways like that. So that was that. Now, coming into today. Today was a beautiful day. Partially beautiful, I'll say that, because I caught the sale, but I caught the buy, but I did not catch the sale. Immediately this morning when I woke up, and I'll go ahead and show you this, the H1 had a fair value gap here by London, okay? Again, I just told you guys these fair value gaps, you want to see these fair value gaps hold if the market wants to continue in the direction the fair value gap was formed, and you want to see that fair value gap be closed if the market wants to reverse price and go the opposite direction. Now, my first mind when I saw this was, okay, I have a fair value gap here and I have inducement. Then I go to the 15-minute time frame and I said, I got inducement here, but this inducement isn't that valuable to me. This inducement here is more valuable because not only have we taken out the low of yesterday with Asian last night, so we've already taken out this low, which means everything to the left of this lowest point can be used as inducement. So all of this technically can be used as inducement. What would be most priority of inducement or liquidity to be taken out today? This area here, okay? Right below this inversion that hasn't been tapped into yet. So essentially I was thinking, since London is here, Asian low is here, these are obvious targets, then I'm probably going to see if we're going to get a sale. If price action gives me those signals, I'm going to take the sale. Now, what led me to take the buy was because at 8:30 we were here and 8:45, 9 o'clock we were here. We were struggling to go up. So I said, okay, if they keep struggling to go up, I'm pretty confident that 9:30 will come out and not only sweep the high, but will come out, sweep this inducement left by London, sweeping also 8 o'clock early New York, and tapping into the fair value gap and then going up. And from there, the idea was to take the buy, let them come up, take out this inducement, possibly tap into this fair value gap, this inversion to the left, right? And then take the sale from there. Well, what happened with that was this. I took the buy and the buy actually kind of, it played out, but it took some time to play out. The buy played out. So as you see, 9:30 came down. I had a limit order set, and I actually have a screen record video of this. I'm gonna post this to my. I'm probably gonna post it as a reel on here, but I got the screen record of the trade as it played out. 9:30 came in, tapped the limit order. Stop loss was below the body of the H1 fair value gap, and then they took me out. No, I'm sorry, they didn't take me out. Once they started going up, and I saw them kind of struggling to close above these highs. When this candle started to come back down, I went ahead and went stop profit. So I took a small win, a super small win. And then 9:45 candle came out. My thought was, okay, maybe I need to switch over and take the sell from here. Maybe they are going to flush this fair value gap, but they're not going to go higher because they did technically take out this small piece of inducement today, and they didn't quite come to the 50% level of this shadow here, but they did take out some inducement. We did take out London, so this might be the sell. They might not go that high. 9:45 came, and as it went down and I saw them start to leave a wick, because my mind said, again, I'm not going to take the sale until this H1 fair value gap gets closed. 9:45 candle failed to close that gap. Once 9:45 swept me out and started to withdraw back up, I pulled the buy here. I pulled the buy and I put my target right here, which once it came here, if it was bullish engulfing and I saw it close above, I was actually going to end up taking the trade all the way to the fair value gap. Well, they came up, and right here at 10:15, it looks like they took out that inducement, but from my personal point of view, they didn't take it out. And at the time, I was like, nah, that's not it. And you can actually see they didn't take it out. I'll move this line up right to the tip of it. You can see they didn't take it out. They didn't. Let me move this other line out the way 1 second. Yeah, they didn't take it out. So I ended up not taking the sale because I just wasn't that confident in the sale. Not to mention, look at this candle here. This 10:15 candle left a wick to the downside and the upside, and the body of the candle closed bullish. So I wasn't that confident in the sale being valid. Once I saw that and this actually started to withdraw back up, I just went ahead and closed the trade. 10:30 came out and they immediately started flushing down. So, and they went down and hit London, hit Asian. So, sometimes situations like this happen. I don't feel bad. I don't feel any kind of way about it because this is normal. Sometimes it's just not as picture perfect, spot on as we want it to be. But nevertheless, the concept still remains the same. In all actuality, this technically is one of my models that I tend to trade sometimes. It's called the Asian London stack. It's basically where Asian and London, they both move in the same direction during both sessions. And then they basically set up for New York to do a reversal. So this can happen going up or going down. And that's kind of basically what happened today. So yeah, good trading week so far. Going to come back for tomorrow and see what we get. And if you want to learn more, the link is in the bio. And that is it.